Okay, hello everyone. Hello and welcome. Welcome to another episode of my Market Talk series. I haven't been doing Market Talk series for a bit now because as a value investor, I always believe that the market is not really related to how the companies I invest in will perform in the long run. So as long as I feel that the business economics is good, I don't really need to analyze or predict what the market will do, what the economies or the market will do. So economics is of a second nature to, I mean, secondary importance to me. But however, I must state that, of course, understanding the market, understanding what the governments will do, or how the governments will signal and put in whether monetary or fiscal policies is still important. All right. So that leads me to what I think of the market, the overall US market in 2024. So without further ado, if you haven't watched my videos before, do remember to subscribe. All right. Your support is really important to me and it really helps me. I appreciate that, right? Without further ado, okay, let's dive in. And today our topic is about the S&P 500. All right. Is it at dangerous levels now in 2024? Will it go further? Will it go up further or will it go down? All right. Let's move on. So as a value investor, I look at the GDP to market cap ratio. Okay, for 2024 forward, okay, I looked at this ratio is currently at 1.85 times. It's forward 2024 performance, by the way, okay, based on analyst estimates. So at 1.85 times, to me, I think it's pretty high, okay, because its historical average ratio is usually around the 1.5 times range or usually below. So if the market is currently sitting at 1.85 times, I believe that it's already surpassed the performance of the stock market has already surpassed the GDP growth, the GDP's performance of the US market. So this means that most investors are really very bullish about the expectations of the US market, which makes pricing of most assets or most stocks, right, quite expensive. All right, because as I actually mentioned earlier, the historical average is just 1.5 times or even lower. Okay, so this is already one of the signals that I feel as a value investor myself, the market is priced quite high, especially in the US. All right, let's move on to the next indicator. Let's take a look. So we now look at the CPI 1 year trend, for example. The CPI, what is the CPI? The CPI actually compares the the inflation, the inflationary performance of the US economy, all right, the consumer price index. So as you can see, as of for 1 year, for the past 1 year until today, March to March today, right? March last year to March this year today, 1 year, all right? You can see it's the trend has been going up. It's declined a bit in November, December, which actually led the Fed to announce that there's a possible rate cut by the first quarter of this year. This is what the initial announcement was like by the Fed. But as of 2024, you can see it's spiked up again. All right. So based on the CPI, it's quite sticky. Inflation has been on the uptrend. All right. Let's look at the next indicator. Okay, then we look at the 5 year CPI trend. Let's look at it. After the COVID or during the COVID, you can see from the COVID period onwards, you can see it trending upwards as well. So for the 5 year trend, it's also trending upwards, indicating that inflationary pressures are still relevant in the US economy up until today. Right? Let's look at the next indicator. Okay, the purchaser price index, which just announced last week. Okay, the latest numbers. The PPI, okay, 1 year trend is also on the uptrend, which Also consistent with the CPI, declined a little bit in November, but since has spiked up. So you can see that for the purchaser price index, okay, the trend is also upwards. We look at the 5-year trend for the PPI. See, based on from 2020 until now, the trend has also been on the uptrend. Long-term 5-year trend and the 1-year trend has shown upward trend. So like the CPI, PPI also follows the same trend, a similar trend. Okay. So what do most of the analysts indicate based on their forecast? Okay, this year until, okay, as I can see, 2028. What are the likely forecasts of the interest rates, of the various interest rates? Okay, where be it the federal funds rate, the 10-year treasury, and the 30-year mortgage. So what is the difference between the federal funds rate and the 10-year treasury? The federal funds rate is actually the rate that the government, the banks borrow at. All right, so that's the difference. 10-year, of course, 10-year treasury is of course the U.S. Treasury bonds that the government issues. All right. So as you all can see, the 10-year treasury, most economists, most analysts, all right, interest rate analysts have actually forecast that there will be a decline, okay, from 2024, end of 2024, 2025 onwards, okay, and as I can see, for the 10-year treasury, analysts predict that it will come down as low as 3% by 2025. So yields will come down to 3% by 2025. Okay. So most analysts actually have forecast a downward trend for the interest rate going forward. Okay, let's look at next what we have next. So if you can see here, all right, the FOMC meeting is a very important meeting. Okay, this meeting discusses the direction of what the Fed is going to do. Okay, it signals what the Fed is going to do in 2024. All right, at least in the second quarter or the first half. All right, so the next meeting is on March 19 to 20, 19 to the 20th. We don't know which day, but a lot of market watchers are already expecting, all right, direction to be implemented by the Fed. So I'm not sure what the direction will be like, what the Fed will actually signal, all right, for its based on this latest CPI and PPI numbers that come out, which is still quite sticky. Okay, I looked at the numbers announced last week. All right, it's of course it's still in line with market expectations. The numbers, okay, the CPI and the PPI numbers, but it has since gone up compared to what it was last November. So I'm not very sure. Okay, what the FOMC meetings will bring about during the 19th or the 20th, which is a few days away. So the market is already expecting a move, but I'm totally not sure how what the move will be like. Okay, so as you can see, right, what the near-term direction of the forex rates and the S&P 500 indicates. Okay, that we look at the S&P 7-day prices, you can see it's trading range bound, and it's the same for the Sing Dollar USD exchange rate. You can see it's also trading range bound with a support level at a major support level at 1.31. So currently it's over a little bit at the high side. It's 1.3 on the high side. It's 1.34, but still it's trading range bound. All right. So this indicates that the market is actually waiting for what the FOMC meeting will turn out to be like in the next few days before making making the next move. Okay. So investors are actually watching very closely. Okay. If you look at the S&P 500 market direction of 2024, you can see actually the S&P is still really very strong. Okay, the S&P 500. This is actually I taken this chart from the S&P 500 SPY ETF. Okay, so you can see that in the long run, the market has actually continued to go up. So you can see a long-term uptrend here, at least 5-year uptrend, right, for the S&P 500. But you can see here as well that the last 3 months, they have been also moving towards an uptrend. So the market has been going up. The bulls are actually pushing the market towards a new high. All right, but as of near term, you can see that if we looked at the 30-day moving average line, all right, the market has since came down from its peak and moved closer. Prices have moved closer to the 30-day moving average line. All right. Okay, so I've identified, okay, even though it's an uptrend channel, I identified there's a support at 500. Okay, the support price range is at around the 500 range. Okay, this is a resistance turn support price range. So it should be, if let's say anything happens, it should trend towards the 500 price range. Okay, $500 price range for the S&P 500 SPY ETF. Okay. Okay, now you can see the next slide, this current slide here, that I have also identified that there's a resistance at 518. So it hit the 518 peak before the market came down again, testing the 518 range as a resistance, a new resistance, and it came back down. So from how I see it, the market has to break 518 or 520, which I think is a major psychological point. 520 to go to further new highs for the S&P 500. Okay, so you can see here as well, there's a recent heavy selling here. So it tested 518 and then it pushed the prices has pushed, the sellers have pushed the market price up. Maybe it's profit taking or it's pushed the market prices back down. So it hasn't tested above the 518 range. So in conclusion, what's my market outlook takeaway? All right. So I see that there's possible continued bullishness in 2024. All right, trending towards record highs. This is what I for now. Okay, if we minus off, if we take away all the FOMC meetings, that is going to be possibly spoken about how the market direction will be like. All right, we take away all this. I still believe that most investors that are moving into the US market, okay, be it smart money or retail investors, still there are many people actually very positive about American businesses. So this might continue to push the index towards new highs in 2024. This is what I think. All right. So despite current interest rates stays by the Fed, okay, the market seems to be continue, driving up prices. I mean, for stocks. So, what we saw in 2023, all right, people say that most investors, I mean, there are some investors saying that, wow, prices have already exceeded the performance of most US companies, thereby making the stock prices quite high, quite expensive in the US, like what I said earlier in this video of mine. All right, by analyzing the GDP to market cap ratios, is really historically more expensive compared to previous years, right? So making the US stock market quite expensive already, but still, right? Investors are pushing up. So most of the people who actually thought that 2023 was going to be a bad year, going to be a recessionary year, it didn't happen. All right, markets, the bulls have actually pushed out the bears. So shorties, if you have shorted the US market in 2023, I believe you will have suffered quite a great loss, right? So even despite the interest rate stays by the Fed, the market is still really, really very bullish. Okay. So I believe that inflation will continue to be sticky in 2024 as well, where the CPI should be around the 3.1 to 3.5% range. All right. For me, I believe that the Fed should maintain rates in 2024. I mean, to me, all right, the Fed shouldn't actually make any moves at this point, because if you look at it, the market is still really very bullish, despite where the interest rates are currently sitting at now. So, of course, I don't think that the interest rate is really very cheap compared to previously, during the, of course, pre or pre-pandemic periods, right? There were even cheaper rates, during the recovery period of the great financial crisis. All right. So these rates are already very high, but yet uh, the market has been very bullish. So that's why I think that Fed should maintain rates in 2024. Okay, I may be wrong, but again, I mean, when the markets are doing well, you shouldn't actually even come in, okay, to affect it. Okay, as long as the C price sits around the 3.1 to 3.5 range, I mean, uh, we have to see. I mean, if we look at it, all right, most of the market participants still anticipate very good performances in terms of consumer confidence, as well as the performance of businesses in the US. You can still see that most companies have actually performed quite all right, despite a challenging high inflationary period. Of course, one can argue that, oh yes, because of inflationary rates that went up, most of the most of the performances by businesses are actually artificially pushed up by high inflation. So these are not the real performance of a company. But I beg to differ, because as a value investor, I look at the long run business economics. So short term wouldn't affect me at all. Okay. So as long as companies are growing at a sustainable rate, I feel that investors should still put in confidence of US businesses which really innovate. Okay. So I believe, okay, once again, I believe that Fed should maintain their rates in 2024. So if you ask me, of course, all right, this is not, once again, I would like to say, this is not any financial advice. You should seek financial advice from a proper financial advisor, when a financial advisor can properly advise you based on your risk levels. Okay. So this is just my personal input. It's not financial advice. All right. So to me, if you want to buy the SPY 500 ETF, all right, I would buy at the $500 levels. If it comes back down to the $500 levels, I'll put a purchase at 500, a stop loss at 490. So at 500, like I said earlier, it can, if the S&P managed to hit above the 520 levels, all right, the risk reward will be 2:1. All right, if you put your stop loss at 490. Okay. So with this, I would like to thank you guys for watching until here. Hopefully I've given you some good tips about what the market will be like. I mean, you guys would have more um, ideas how the market will turn out. Please also share in my comments below, because like I said, this is only my personal view. All right, everybody will have their own views about how the market will perform. Okay, so for the win, guys, and see you in my next video. Take care. Goodbye.